Yeah, okay, guys, let's take a look here now at Tesla, as that was our number 2 choice. You know, so I can appreciate when you first bring this count up, it looks, I mean, it looks rather challenging. It's like, holy shit, what am I going to do with this? But I tell you, if you just apply the methodology that we teach you and you work through this one swing at a time using your fib tools, it really, you can really make sense of it here. So, now, I mean, of course, we can, knowing what we've got here now, we can look at this and say, well, clearly that's not corrective, right? So something very impulsive is going on there, but you would want to put it in the context of what's preceded it. Now, we've been through this count many times. Let's pull it up here. So because what happens here, because of the scaling the trading view is going to do, you kind of have to push that off so you're not seeing that, so you can work through what's here. And I do think this is worthwhile because it's going to influence where we are in the largest degree. So just going all the way back here to our absolute low, I think there's no other way to go with this other than 1, 2. And that's technical off our low. Here we get our nice 1. We come, we get through the 50 a little bit, but we come and see a nice little high volume node here. So between the 50 and the 618, just where you're looking for the 2, tighten that up here. So then coming off of that, we can't call this a 3. So we can't go 1, 2, 3. It's not long enough. So we're stuck with 1, 2, 1, 2 at a larger degree. So at this degree, we've got to trade this as a completed 1 into the double top here. So it's 1, 2, 1. Then this gets, this chop is, right, when in doubt, simplify. But I think you are left here having to work through a WXY to complete with the ABC. Right, so if we come, I know it's kind of annoying that it does that. Right, so let me open that up here. So from that, I do think we're just kind of left with the only option we've got is an ABC into an X to finish with an ABC to bring us down here for the 2. It's deep. It's certainly a deep 2 relative to this as the start of the 1. So if we go through that 1, we're through the 786. Likely that's 887. Let's pop the 887 on there. Yeah, we're in between the 2. So it's essentially we get essentially a double bottom here with this. But we stay valid, so we maintain an internal retracement. So coming off of this as a 1 WXY into the 2 to give us our 2 down here at this degree, then I do think we've got to go 1, 2, 3, 4, and the big rip is an extension in the 5, because this, if we open it up here, you'd be looking for, so the subdivision is here, so I can complete an impulse here, so I can't ignore it. So from the low, if I go into the 1, into the 2, well, look what I do, right? Right, exactly highest probability zone for a 3. 1, 2, 1, 2, 3, 4, 5. So I've got everything I'm looking for, and a little shallow on the 4, but this is one hell of a move we've got on our hands here. So I think you stay with the 3 here and work the extension in the 5th. And that's, like I said, so in the 5th, 1, 2. I mean, that's quite a 5th. I mean, it's just crazy, right? So just an amazing rip into the 5th. But the reason that the prior count is important is because it tells us where we are in the largest degree. Or, well, let me rephrase. It gives us a position to where we can qualify this to where we think we are in the largest degree, right? I mean, there's no telling how high this goes or how low it goes. But right now, we can qualify the count here by working through a 1, 2, 3, 4 massive extension in the 5th. To give us the 3 at the absolute, to give us the 3 at this degree. So we have 1 degree that's higher here, that's at primary here in the 1, 2. So this is the 1, 2. As I'm counting it, that would be the 3 at this degree. So we're still seeking the 4. Now, is this enough? Are we in on the 4? Well, all right. So again, just standard ops, guys. So we take the low to the high. And we've come between the 38 and the 50. There's a little gap here. Likely was an effort to fill the gap. It remains unfilled. Excuse me. So this would be a mighty abrupt 4 relative to the 1, 2. So the implication would be that while we've started the correction, probably, right, if we see any sort of push lower, you'd be inclined to think that that's going to take a bit more time. Now, you could make the case here we've got a lot of complexity in the 2, so we'd be looking for something simple in that 4. But if now here I am on an 8-hour. let's open this up. Now, of course, the other thing to consider, you can, if it's easier for you, you can pop this into log scale, so we certainly have the range to support it. So if that helps you kind of clarify, because you get the expansion down here. So if it's 1, 2, 1, 2, now this gets a little bit easier to read. So if I pull this up, now where are we in the correction here? Well, a couple of things right off the bat that just are screaming at you, and certainly we've got just a shelf of support down here. Prior resistance. Get that right on that. So you look at that and you say, all right, well, my instinct would be to just wick off this low. I'd be wicking off this high, even though we've just drawn it here. I want to pay attention to that. From the low to the high, that would put us in here down to the 50. So, you know, are we done? Or, you know, so here now, then if you're going to come out of log scale to do more analysis as you zoom in on this, then I think that's reasonable. So at this point, is that an ABC? Well, hard to argue with that. So, but are we done? So you can certainly get the ABC in on this on the structure here. So a deep on the B relative to the A, but given the movie here, so there's a nice little ABC in here. So let me tighten that up. Does that look like it's done? Well, I mean, so one possibility is that, yeah, we are done. We're going to leave an open gap here, which would be, you know, I'd be cautious of that. Gaps are rarely left unfilled. Now, some people will tell you that if you get into the break that you're filled, you know, let's wait and see. So certainly one scenario would be that that we're in here and we've just gone 1, 2, and we're looking for 3, 4, 5 to take us higher. Let's get that. Oh shit! What do I want here? I want this. Let's go to sub-micro here. So 1, 2. Now, of course, if it starts to go here, I think because the length of time, it's so abrupt. So we're doing this in. Oh, where's my? So here's our pivot high at what do we get here? At Feb 4th, and our low here is at. So you're about 3 weeks into that, but the 2 was certainly much longer. So it would surprise me if we were done here. So immediately at this point, now you're already thinking WXY. So it remains a function of what comes off of here. So now as we sit here retracing, you'd be monitoring for, okay, if I've got the 1 in, right? So I wouldn't assume the WXY right off the bat. The market's going to have to show its hand here. But as we come into this, you could think of this and say, all right, well, if it is going to end up, if my Elliott thinking is going to influence me such that I'm looking at that going, well, the length of time is quite abrupt to be correcting that entire move. And then if we think about alternation, where we've had a very complex 2, I mean, that kind of leans you into maybe, but you're not going to really have any conviction here until you see, do we get a reaction here? So so let's say it was a W. So let's label that up. So if this was going to play as a W, and then we're seeking the X before we come down for the Y, well, we certainly would be looking for something that would be corrective here. Now there's a lot of parameters from which we could see an X, but one of the first things we'd be looking for is a retracement of at least the 618. So from the absolute high to that low. Well, we're not there yet. So but if we come down here and then we start to go impulsive here, well, then we're going to have to live with the ABC, and we're going to be putting the 4 in here, going, well, could be such a raging bull, but I would be just cautious about assuming that the correction is in. So if you're looking for the trade, I mean, whether it turns out to be an X wave or we go into a third wave. If it's going to be an X wave, you could be thinking A, B, C into the X. So in the same way that a C wave can be just as lucrative and it's another money wave, as would relate to going in from the 2 into the third, if this is going to end up being labeled as an A, B, C of an X, well, you're still trading the money wave there. You'd be looking to get into the B to the C of the X wave, knowing that minimum projection would be up to the 618. If we're going to get then we'd just be doing the same thing. So knowing that we've got that, let me pull this off so I just reduce some of the lines. If this is going to go A, B, C, well, first question is let's get our pivot for a 2. It doesn't look like we're going to get that here just yet. So I wouldn't be quick to be saying, oh, low is in, because we haven't even done a 50. So if we look at it from the other side, from that low, Yeah, we're just through the 38, so you'd be looking for this to go a little bit deeper, whether it's a 2 or a B. So you could trade the C here of what potentially could be an X or could be a 1, 2, 3, right? They have the same dynamics, the same characteristics. The question is, what are you projecting for? So if I know I'm trying to move fast here. If I'm projecting for a C from my low, here, let's pull this off so I can get that C. So if I'm thinking that it's going to go into an X, if I'm going to go A and I'm thinking down here for a B, well, this would be a reasonable spot here. We'd be looking for maybe the 1, 2, 7, 2. If we're not going to do if it's not just going to be A to B equals the length of A projected from B equals C, this would be your high probability. Well, now I'm looking for confluence. So where do I see here? Well, here's the 100 just on the other side of the 65. That would be, I mean, ideally, if you come up here, you'd want to have some algo participation if we're going to come back down. So this would be, if we get through that, then you're going to be clearing the resistance up here. So again, you lose that sell side resistance if we get through that 65. So if we go up here, and again, assuming we come down here and we're going to go up and we're going to get a C at the 100, well, we'll have broken the resistance. So potentially going higher to give us an X wave up here, challenge the pivots, maybe get to the 1272. Maybe it does turn at the 100 and we just break the sell side and we hit the 100 and then we start coming down. If you start coming down, then you've got the algo from the low that's going to be participating. So you always have to be paying attention to what did the algo do last. We know if they break from the high that the next thing they're going to do is take the, let's get this off. And again, I'm trying to go fast for you guys here. All right, so if they break it from the high, then from here, the next thing they'll do is they'll be participating at that. So could that be the X going in there? A, B, C, X? Well, now, of course, you can't confirm it until you see, what do I get here? Do I get an A, B, C into the Y? Well, now we know where we are. Now we have a completed pattern. Although right off the bat, you're going, wait a minute, I just had a WXY in the 2. Am I going to have a WXY here as well? It'd be unusual. So I do think the trade is here to take, right? If you're a bull and you're looking for the opportunity, we're in the buy zone. Given the backdrop in the market, I don't know that I would be running into it here. So if I could get into this here, and I might be looking at a call spread or something, because all the volatility is so high, call spreads would be friendly, so the out of money calls will be all just inflated with volatility. But as we see the reaction here, if we come down into this zone, I'd take a nibble here, or I'd look at a call spread here off of that. But if it breaks, if we get too far down, and keep in mind, we've got multiple, well, pardon me, this is the gap that I'd be watching for. So if this comes down, then this analysis is incorrect, right? So if we break this low, we come down, we fill the gap here, well, then we know something else is going on here, and this is not going to be 1, 2. It could still be B, actually, if we had an expanded B, right? But you wouldn't want to plan for that. So if you're thinking there's an opportunity here to get back into this, the simple ABC, it's either an A or a 1 into the range here, that's buyable. But I'd be strict about, set in your mind, okay, at what point am I exiting the market? Particularly if you do it with a call spread, because the temptation with options is always to stick around and say, well, let's see what happens. That's dangerous. I've made that mistake way too many times. So I can counsel you on that. Have a clear point. I don't care if you've been in it for 1 day or 1 week. If it breaks that level, you sell the spread at a loss. Don't screw around with it. If you just think of it like a futures contract or a crypto trade. If you get stopped out, if it takes out your pivot, exit the spread. Take the small loser while it's small. And then reevaluate, so that if this comes back down here, and maybe we get 786, maybe we come down, we fill the gap, you get something like that, and it starts to go again, I'd rather reposition for that than be putting the stop, something like that. Say, well, as long as it stays above the Vegas wave. That's way too much risk. It's always, always, always better to take the small loser while it's small than let the thing get away from you, because once it gets away from you, you can't undo it. Now you're just now it's the trader's prayer, right? Oh, please, just this one time, come back for me. I'll never do it again. Been there, been that guy. Just this time, just one more time, just come back for me. You may have to experience it yourself before you avoid the mistake. But the idea here is that I'm trying to save you from the mistakes that I've seen myself, and hundreds and hundreds of other traders make. You never want to be down praying to the market gods, because they will always disappoint you. The market will not do what you want it to do when you need it to do it. So you have to be methodical and mechanical and disciplined about how you approach the market. So have an exit point. At that point in time, I exit my trade, I take the loss. I reevaluate. Sure, you can say, well, if I don't close it out, I haven't really experienced the loss. Bullshit. Take the loss, reevaluate. Don't be that guy that goes, well, I'll stick around. I kind of like it. Don't become a Tesla hodler if you go into the position as a trader. Now, if you want to be a hodler, by all means, have at it. But if you're trying to put together a swing trade here, which is what this would be, you're trading for the C or the X of the C of the X, or the 3 of the impulse that's going here. Stay with your plan. Don't change your plan because you didn't like the market action. Have a plan. Be specific about it. This is what pros do. Try and emulate success in the market. Small losers. Small losers are always small losers until you do something stupid like, well, I want to give it a little more room. I want to give it a little more room. You'll end up saying, oh, well, we're down to the structure. I should be okay. If I hadn't made these mistakes and watched hundreds of traders while I was a broker, where I was learning from watching other people do this, if I hadn't seen it hundreds of times, I wouldn't counsel you so aggressively. You don't want to be that guy. The skill that you're really trying to manage is not the analysis. The analysis is the fun part. That's the easy part. That's the puzzle. We all love the challenge of trying to solve the puzzle, and there's nothing sweeter than being right, right? It's money won versus money earned, right? You did that with your brain, your mind, your analysis, your skill set. That's the fun part, and that's the reward. But the skill that you've got to develop if you want to be successful is money management discipline. It's the least fun part of it. It's what people spend the least amount of time on. And it's why most people are not successful. They're so caught up in the puzzle that they forget to focus on the money management. I've said this many, 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 many times before. It is well documented that you can be profitable in the market by a flip of a coin with good money management. Heads I buy, tails I sell. No problem with good money management. Okay, guys. Didn't mean to get on a rant there, but this is a tricky. Market is very, very, very. I mean, we're seeing volatility the likes of which we've never seen before. This is insane volatility we're looking at right now, as the market is just in a panic mode. So, if there ever was a time for discipline to rule your thinking, it's right now. All right, guys, I'm gonna try and get one more for you.